Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Here, so look, I'd be quite concerned about it. You really need to have an initial stop loss on a stock, any stock, especially these more volatile type shares. The electro-optic systems is one of those. So the risk to the downside is significant if it does keep falling. If it goes below that low, then I'd be really, really concerned about it. Yeah. That's July low.
Yeah, but higher highs and higher lows is not necessarily a buy rule either.
No.
So it's part of an equation, but it's not necessarily a buy rule. But right now, see where it closes at the end of the week. But if it keeps going, just have a stop loss on it, I think is really what Janine's saying. Is that, just have a stop loss on it, because if it keeps going south, you might do your dough on this one. Next question we've got, Janine, is from Robert, who's your best friend now, isn't he?
Okay, Robert.
Okay. We've got an email from Robert. Hi, Dale and Janine. Whilst all I've been watching AGL trending down from April 2017, I've noticed some big volume moving after the market is closed on the 10th of August for 15 days in a row. Before this date, it looks like average volume was between $1 and $2 million. Is there a way to know whether the big end of town is buying or selling? While I don't let this sway my thoughts of the stock, as I trade on confirmation, not speculation. Very good, Robert. And we'll wait for it to confirm an uptrend in the future. I thought others might also find this interesting and would like to know how much the big end of town trade outside of the market. Robert.
Look, it's actually continuing the downtrend, but you may actually be able to get a trend line there now. So if I draw a line down here, now I haven't done it, to the book, to the letter, but just having a quick look down there, you can see it's still under that angle of that trend. So, at the moment, I wouldn't be buying, but if it actually goes back above it or produces an entry as part of Trading Mentor, if anyone out there is currently on the Trading Mentor course, it may actually produce that entry first. Then it might be an opportunity. But again, you would just set a stop loss underneath it if you were looking to enter. But the big end of town are not buying if it's falling like that. So that's the end. That's the bottom line in terms of keeping it simple, because this is a big stock. So
it is a big stock. But understand it also helps to understand volume, because with volume, every single share sold is bought by somebody. So you have an equal number of buyers and selling of the shares. So somebody has to buy whatever's being sold. It's like, with the houses on a market, you got one seller, one buyer at the end of the day. But there's still a house sold, and same with the shares. If there's 1 million shares traded in a day, that means somebody's bought 1 million shares, that somebody sold 1 million shares. It's the amount of participation within all that. So if you've got a house auction and there's 500 people standing outside the front and the auctioneer's going rampant, the house is going to go over its reserve and get a very, very good price. But if there's one person standing there, whole different ball game. So it's more of a buyer's market than a seller's market. So that's really what we're talking about with volume. So whilst volume, looking at the screen on the volume there, it doesn't look like there's a whole big mess in it. Trying to tell where the volume is by the big end of town or not will depend on what the price movement is, because the big end of town don't want large price movements. They accumulate over months if they like a share long term, and they'll distribute the shares or start selling the shares over months and months and even longer periods. So they want to get their high average prices for selling it and a lower average price if they're looking to buy it. But right now this stock is in a downtrend. It continues to look like it's in a downtrend. So to me, and as Janine showed you, it's below a downtrend line, so doesn't look that exciting to me. But don't sort of play too much in that or sort of think too much about the volume. I think that's probably my
Volume is more,
answer.
when we teach traders, volume is more used for short-term trading.
Very
so
short-term
just to give you an edge when you're looking to take an entry, just to prove that there's some momentum behind it. So what you were saying is good in that if you get the volume going up and increasing as your entry occurs, then it's more likely that the stock's going to continue to go up from there. That's the theory. So, look, great question.
Yeah,
a bit of one out of the box, wasn't it?
But I think if people overuse volume way too much, and they look at that depth of the market, they look at volume and they overuse it. They don't really understand it properly.
Yeah, because volume could be a bit sporadic on the stocks on the daily chart. I wouldn't use it on that.
Yeah, so it's just really about understanding it a hell of a lot more, Robert. So great question, though. Thank you very much for that. But right now everything's fallen away on this stock, so I wouldn't go anywhere near it. So next question.
Well, that's our question 4, so we've covered off.
Oh, so we're into the main topic, are we?
Remember to hit that subscribe button now and also like the video. Thanks very much for that. And also remember to share tonight's video on your social media with your friends and colleagues so the show can continue to grow and we can help more people.
Especially if you're on Facebook, share it now, quick.
Okay, tonight's topic, best mining stocks to buy. Drum roll in there. Which stocks should you watch?
There you go, drum roll.
Okay, tonight we'll share our thoughts on the Australian metals and mining sector, why we believe the biggest opportunities will come from this space, and how to identify the best mining stocks to buy and what you need to consider when deciding to trade these shares. Now, this is my favourite area, mining, commodities, just absolutely love it. We have said a number of times that materials and energies sectors will be important areas to watch on our market. Now, in particular, materials sector, we think that the metals and mining are the way to go, and that this sector will actually outstrip other sectors. And so a lot of people are falling in love with the tech sector at the moment. But just remember that the sector that's actually the most popular at any one time can pretty much go out of favour at times, can't they?
It always does, doesn't it?
It just swaps, doesn't it?
It just swaps.
So within the materials sector, of course, we have what's called industries, and we're going to go into that tonight, including metals and mining. And why do we like materials and in particular mining stocks? Well, we were talking about some great companies, Dale and I, this week, and there's some really solid companies on our market that really have a good foundation for growth, don't they? I mean,
very much so.
Some of the biggest stocks on our market,
yes,
like the BHPs and Fortescues and Rio. And look, on the basis that society will always need the materials, they'll always need materials for construction and in production of the goods and services, things that we take for granted all the time that those materials go into. You probably don't even think about where something comes from.
Well, to me, nothing we can physically touch doesn't include natural minerals.
Actually, I object. What if I'm not allowed to actually...
Hey, I've got minerals. You just melt me down and you get some minerals out of me. I'd guarantee it. Don't you worry about it.
Some gold teeth there.
Probably
maybe
gold
worth
teeth
it.
but every girl loves gold and silver and diamonds, don't they?
Okay.
Or is that sexist? I'm not allowed to say that.
Yeah, that is.
Okay, I'm not allowed to say that, guys. Take that back.
Okay. While currently technology stocks are dominating, as we're saying, they're getting all the media coverage, aren't they? Many stock prices in the sector are trading beyond real values, as Dale was talking about, due to rampant speculation, which really just makes them high risk. There's opportunities in there, but for people who are savvy, but high risk if you don't know. So some of the startup stocks that people are speculating may not even be around in a few years. That's something to think about, isn't it? We've seen these booms and companies go to the dust. So look, and people are calling this another tech bubble, particularly in the US at the moment, and you've probably heard that already. But it may interest you to know that the top 10 stocks on the US market by market capitalisation make up around 27 or 28%. You were talking about this, I think, we to Jim Beach at some stage.
Yeah, in the US, yeah.
Yeah, and the FANG stocks occupy around 23%. And remember that there are other tech stocks not included in that. So that's a huge chunk of the US market that's in the tech sector, isn't it?
Well, the FANG stocks are Facebook, Apple, Amazon, Netflix and Google.
Yeah.
Okay, so they're basically, but what about so it's Facebook, Apple, Amazon, Netflix and Google. But there are some other...
Can you say that again?
Facebook, Amazon...
I just want to see if I could slip him up.
Facebook, Amazon, Apple, Netflix,
You got
Google.
it, yes.
But there are other big tech stocks that aren't there. Microsoft's not in that.
Right.
And
there you
that's the
go.
number. That's the second biggest stock on the S&P 500.
Yeah.
Apple being number one.
Now you can't say that they're going to go.
What about Adobe?
Bust or disappear. It's
No.
not going to happen. But what about the tech sector? If it has its day, it's had its day, and then eventually falls away, then the whole market's going to pull back in a significant way. So it could take the tech sector bubble for the US market to fall away, couldn't it?
Yeah, absolutely, and it will. But when there's, how we talk about signposts about things.
Yep.
We always talk about signposts, like what's going on in the marketplace in terms of market psychology, not necessarily just stock prices, but what is the market talking about? If the taxi driver's giving you hot tips, then you know it's going to crash type stuff. One of those things is when you start seeing people saying, like, these are the new things, everything old, everything like Dow stocks are old, forget about this is the new way of trading, this is the best stocks, this is the future. So when you start hearing that sort of stuff, it's like now the end's happening.
Yep.
Because it's when people who, like, for example, you talked about mining stocks, right? Now, most people watching this would never heard of Ariadne back in the 70s. That was like, there wasn't even a freaking mine there pretty much. There was a bit of a mine, but it was all just smoke and mirrors, and it went through the roof and everybody lost their money. But, back, we talk about Bond Corp from Alan Bond, those sorts of things. Christopher Skase's company, there's a whole range of different companies that rose to great heights and then crashed to the floor, and we had FAI, in terms of the insurance company, crashed to the floor.
Yep.
And people they forget about these things and the new players on the marketplace, because every year there's a new set of 18-year-olds and a new set of 25-year-olds who may not have been on the market for. And then they went, wow, this is the new way of doing it. And so that's when it starts telling me there's things to worry about.
Okay, so you're probably thinking to yourself, okay, what's the good news, Dale and Janine? Okay.
Make money out of mining stocks, yeah.
Yeah, if there is another tech bubble, like there was 2 decades ago, then Australia has a small exposure to the sector. So that's really the point of it, isn't it? We've got a very small exposure to the tech sector compared to the US anyway.
Well, all our top 20 pretty much, they're all either financials or materials companies.
Yep.
Almost.
So perhaps you're sitting on the edge of your seat ready to take notes as we get into the bulk and the juicy part of the main topic tonight. So first of all, what you were going to do was talk about something in your book before we walk them through the process of finding some good stocks.
Oh, okay. You want me to show you that?
Yeah,
so I've got to bring that
up. So
up.
what we need to do is have a look at
so bring up
this, because this is a really juicy piece of information for everybody to have.
For those of you who've read my book or got my book, you've got this chart in the book, and you can get this chart from the ASX. You just got to figure out where it is, but you can see down at the bottom right-hand corner, it was constructed by a company called Philo Capital, but I got it from there. Basically, it's showing the total return from Australian shares versus, or of shares from Australia versus the USA, and it's since 1900. So we're talking about the last 115 years, because this one finishes, I'll go back, bring it back up again. Where is it? Where'd it go, Janine? There it is. I lost it. Hang on. Oh, I've lost it. Let me just get rid of that one. I'll just open it up again. Where is it?
Yep.
Lots of technical problems today, isn't there?
You've got sticky fingers.
I'm not going to click anything, and I'm going to hold my tongue the right way. So you're looking at since 1900, so it's comparing Australia versus the US. It's got all the booms and busts. They've got all different mining boom here, the late 70s mining boom, which is what I sort of briefly mentioned with some of those mining stocks that we had through there. You've got depressions, recessions, you've got world wars, you've got everything in here, and basically what you're seeing is the green line is Australia. So you can see through the early 1900s, Australia was outperforming the US, and then the US caught up into 1925s, then it went down again. Australia then outperformed all the way through to 1960s, then we came together again. The US is just behind Australia, and now through here in the 2000s is when the US started to really overtake Australia. Then we came back together again, and then take off again, and the Australian market was above the US right through the early 2000s, and then we came back together again, and now obviously the US is outperforming Australia. So really what this chart is showing you, and a lot of people think that the US leads world markets, and you only have to, if you get onto Google and you Google Triumph of the Optimist, and it was a book put out by Princeton University Press, and it's called, as I said, Triumph of the Optimist, and you can get a bit of a download on it, a synopsis or a short chunk of it. and they studied world markets or world markets over 100 years, and they've updated it since then.
Yep.
That was released early 2000, and they said Australia was the best performing stock market in the world over the last 100 years. To that point, now South Africa is number 1 and Australia is number 2. The US was number 7 on that list. And we're driven very much more by commodities, where the US is not.
And I think eventually this whole thing's going to come to roost, and we've got a much more solid market on the basis of the metals and mining sector. The financial sector, yes, a bit of a question mark, but while governments are willing to support the economy in the way that they're doing, financial stocks could still have some downside, but eventually they're going to start moving up again. So I'm just thinking more big picture point of view from this sector, and I think that chart is just brilliant. I think it just explains everything about that switching between the US market and the Australian market.
Because eventually people go back to tangible, like we're seeing more people buying gold and silver right now.
Yeah.
For absolutely great reasons. And I know in our Talking Wealth shows that we're going to be running, we're going to have a couple of gold experts we're going to be talking with to share with people what is it about gold. So I'm going to be doing that through in the next couple of weeks. I'm trying to tee up a couple of interviews now, so stay tuned for those. They'll be put up on flicks.net when we do them, but I'll let you know when they are anyway, so you can have a look. But that's tangible, and that's what people are going back to, and that's what markets go back to if they see, I won't say smoke and mirrors, but if you see things that get overheated and there's something that's not really tangible, people always go back to safety. And safety is something like gold, like silver, like diamonds, like those sorts of things that are physical, tangible. But because if you look at the growth rate or what the US dollar's been doing, the US dollar's going down against major currencies right now, and the value of the US dollar has been going down for decades on the spending power of the dollar, and with China coming up with a fiat with their cryptocurrency, their sovereign cryptocurrency, the US dollar may be out the back door pretty much. And so what is that going to do to their economy? But it is interesting. But let's go on. We've got to talk about some other things, aren't we, Janine?
Yeah,
and then we're going to get in and look at some of the stocks.
What is it? The duck's guts?
The duck's guts. Okay, you're allowed to say that.
That's a terrible saying, isn't it? But isn't it?
I'm glad
I think
you
my
said it.
grandparents have said that.
Can I get a swear jar for Janine, please?
They're not here anymore, bless their soul. But, look, on the screen there, we're going to show you the stepping process. So this is sort of along the lines of top-down analysis. Now, what we're looking at is the the S&P Dow Jones indices. So Dale showed you this on the show. Was this last week or the week before you showed them?
That was with the micro caps.
The micro caps segment that we did, That this is a really good source of information to find the sectors. So you can go in and have a look at the indices and read up about the overview for the metals and mining index, and you can see there that a graphical view of it, which I've showed you before. You can look at the performance of it. You can also get some information like fact sheets and just a bit of a rundown. So the S&P 300 Metals and Mining Index is based on the S&P ASX 300. So it's comprised of companies that are classified by the Global Industry Classification Standard, the GIC standard, as being in the metals and mining sector. So they have all of these classifications, which I'm not going to go into, but you can read it more on their website, which includes producers of aluminium, gold, steel, precious metals, minerals, diversified metals and minerals. So there's a lot of different commodities that are being covered here, and of course companies that will be picked up in the movement of this index. So this is a place to start. So there's some data on it as well. So in the fact sheets you can find information on there, looking at the characteristics, the constituents, and some of the breakdowns. So you'll see that the maximum market cap of a company in this indices, the size of it, and the minimum market cap. Okay, now that probably doesn't mean a lot until you get down to the stocks, but the biggest stocks, obviously BHP, Rio, Fortescue, are all up in that top.
And they're the ones we generally would suggest people stay with, wouldn't it?
Yeah, look, they're the ones you'd have on your watch list. Newcrest Mining and South 32. So there's a few really good ones on that list. There's some really big stocks there. So that's really the first place to start when looking and coming down the chain. And then go and do some research on this website. So, that's fantastic, isn't it? It's disappeared on me. There we go. Fortunately, I've saved it in there. So we've got the MSI World Metals and Mining Index. Okay, so this is composed...
So you're still getting that off the S&P 500 S&P website?
This is actually the MSI.com, so www.msi.com. Now, this is actually in US dollars, but what I think's interesting, and I don't know if you can see there, I might have to zoom it up a bit for you to see it. What you can see there is there's a chart, right? And the chart's showing you in blue the world metals and mining. So this is the graph at the top there. So hopefully that's clear enough. This is this blue chart coming along here.
Okay.
Now the world index, right, this is the graph that represents the growth and the performance of the overall world index. Now you can see that by this move it's actually dominated by the US market, of course, because the US market is actually the biggest in the world compared to other markets. Now, but what's interesting is the metals and mining index is actually looking really bullish. Right, overall, it looks really bullish. And I can tell you from my knowledge of charting that this is a significant low that the whole metals and mining sector had way back here, right? So I've just got my cursor there. I don't know if you can see it there, but the low that formed here is actually a long-term low. So we saw from 2011, these mining companies just rolled over. This is when BHP was actually raising capital and people were actually buying more shares. BHP are very savvy. Often when they're raising capital, there's something going to happen after that. You know, you've just really got to follow this company to be able to know what's going on around the world. So the move out of that, this is a bullish sign. Really bullish sign in my book that even if the BHP and FMG and Rio come back to fill those gaps, and even if they trade down lower than those gaps, the long-term potential is significant. So I wouldn't be trying to buy them just based on a long-term potential unless I was confident that there was a low in. So I'd be waiting to see whether this move down that we're just starting to see potentially, whether it's going to come down further, whether there's going to be a bit of a sell-off. But after that, I'm seeing there's going to be huge opportunities in this area.
Yeah, I totally agree with you. So let's go and bring it down into some stocks because we've
got to move on. So look, I could show you more, but you can look up that yourself and just have a good bit of research there. So looking at this, we've gone to ListCorp, which is a website that Dale showed you some weeks back as well. I think when you were looking at the small companies
just looking for stocks within a sector.
Yeah. And so here you can actually go in and look at this is all companies we're looking at, sectors, materials, right, on the ListCorp website. So this is just listcorp.com. Now you can see I've looked up the materials sector here on the Australian market. There are 661 stocks listed in this sector. That's huge. Like how's the average person going to go through and
more than I need, that's for sure.
Out of that. So, but it does help you in that what you can do is go and select the industry within that. So if we keep going down, we can select an industry and we see here there are actually 5 industries that make up. So the companies are all divided into their business, whatever their business is. So metals and mining companies, there's containers and packaging, construction materials, paper and forest products. So if we go into metals and mining, that'll help us narrow it down to 661 to 619. We're not
that's a big leap, isn't it?
Yeah.
10% off.
Yeah, 10% off. So now we've got to go down further. So diversified metals and mining, we've got gold in there. So you can go in there and look at all the gold stocks that you might be interested in. You can look at the diversified metals and mining and see what they're doing. And you can look by market cap. So it actually shows you here, you can see in the table, the code for the company. You can see the company name. You can see the market cap on the right. And then the share price. But this is not really relevant to us. We're just more interested in seeing, okay, we've got some big stocks in the list. We want to see what the market capitalisation is.
But what would you suggest for market cap? Top 10, the top 20, top 30, stick to those? What would you suggest?
I'd say, look, the top 30 that come up. But if I select diversified metals and mining, that reduces it down to 383. But I might look at the gold one separately to that. Yep. So I've got now 383 companies, and like you say, I can look down here and see where are we when we get down to number 30. Well, we've got around Sims Metals, sort of, so let's say. But you could go out even further. You might decide to go out to 40. Mount Gibson Iron's another good little company that I'd keep an eye on. So So that's pretty much how you can find stocks, but that's not how we do it.
It's an easy way
exactly.
for people
It's an easy way for people at home to find stocks, because what we're doing is looking at the fundamentals of companies, and we're also then looking at the chart to see if the fundamentals and the technicals are lining up at the same time.
Okay, so let's roll on to the charts, because we've had all these technical problems that we're running behind anyway.
So let's roll on to this, and we'll get out of that one, and we'll. Actually, no, I think I've got it in there.
We might have to beg Mr. Producers to allow us to go overtime a little bit.
Yeah. So look, at the end of this workbook here, I've saved something. We've saved something for you, which is a list of some of the stocks that would be in that sector. So this is metals and mining. So in Optima, which is the software we use, it allows you to go and select that sector of the market, or the industry within that sector, the materials sector, and come up with a list of shares. Okay, so I've sorted this based on market capitalisation. So this is just another way.
Largest to smallest, yep.
Of finding it, largest to smallest. And so if you want to really narrow down the list, you could just use the top 10 of the biggest stocks on the market, and you can see those there, because we know that the top 3 are the ones we were talking about before. And then we've got Oz Minerals down here, Alumina, getting into the 20. You can see that the liquidity starts to drop off. Now, I've got a chart on the right-hand side. You can see that World Metals and Mining Index, BHP, looks like it, doesn't it?
Yep.
In terms of how it's unfolded, except it hasn't gone through the high yet. Right? So
how much, you did mention how much the Australian metals, materials companies are a part of the index. It's massive, isn't it?
Oh, look.
So of course they're going to affect
on that fact sheet, I'll just quickly bring this sheet back up, because this is it's disappeared on me now, so I can't go back to it, which is disappointing. But on that fact sheet that I showed you before from the MSI website, it showed a pie graph, right? And it shows you that approximately 25% of the world companies, metals and mining companies, actually are in Australia, right? So we dominate that index, and the three countries that actually hold the majority share, America's only got something like, I think it's only 10%, or could even be less than that.
Less than that, I think, yeah.
The Canada, the UK and Australia all hold around that 25%. So that's 75% of all of the metals and mining stocks are in those countries, held by companies in.
So if commodities are running, Australian stock market's going to fly.
Yeah, that's what I'm saying essentially. But of course we need to get the financial stocks back up and running again. But the mining stocks at times get out of beat and out of step with the financial stocks anyway. So our market could languish and go sideways if the financial stocks fall and the mining stocks go up. Of course, you won't see that as a strong move like we've seen over the last few years with our market. So look, I think it's definitely an area to watch. And look, when you're looking at the chart to find stocks to buy, first of all, obviously go to the monthly chart. Always look for the direction being up, as we talk about every week on the show. And then what you've got to do is on the weekly chart, you've got to look for momentum to be up and a strong signal to buy.
That's critical what you just said. And this is where, it's like we saw that stock that was falling away, right?
Yeah.
And somebody saying, hey, the volume's up, blah, 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 but it's still falling away. And direction is the number one thing any investor or any trader should be looking at very first. But
the challenge is, right, because we say that and then we get rules that could be on the monthly or weekly chart, and there can be times to buy, because the rules that we use are actually indicators that the stock's going to go up. It doesn't necessarily mean that it's definitely going to go up.
Yeah, but you don't buy it while it's falling.
But it could be the start of a move up, right? So that's the challenge. So now, a lot of stocks, if you get them on the runs, people always think, well, they may fall away, so I'm going to miss out. But not necessarily. If you look at a big stock like this and it falls 20 or 30%, and then you get an entry after that, it's often a really good time to be buying it.
Very good time to buy it anyway.
So look, we were not interested in these shares, mainly for the point of we thought it was going to be a bit of a fly-by-night. It's gone up faster because of the excitement over the tech sector and the rebound in the market as things have been exaggerated a little bit because of that. And if it all comes to roost again and these stocks come back and fill their gaps, after that there'll be a huge opportunity, but they could keep going up. So, I mean, BHP could take off through this high and then keep going. It's a possibility.
Yeah,
so that's what you've got to look for.
in the next month or two, won't we, really?
Yeah, so you've really got to look for that move back through a high. Some people try to buy them on their lows. I think that's a mistake, because BHP could be pushing back up again and then it trades down lower. So look for that strength in that move up.
Cool.
So that's just, I'll show them another one actually. Let's look at something different. So what about Let's take
Just
Oz
show them the one
Minerals
that's going to go up the most in the next 3 months.
in the next 3 months. Look,
That's what they're asking.
actually,
I can hear them.
Oz Minerals is still going up, and I like Alumina as well. It's down at the moment, Alumina. Oz Minerals is actually doing really well. So it's going up really nice and strongly. But I'd wait for the next pullback on that share, because if you look at it from a long-term perspective, it's going to be up long-term. There's just this gap right on the monthly chart. So we could see it slow down a bit, pull back, trade sideways for a while. But they're stocks that I think are really good if you've got some good rules on
So in the next 12 months, BHP, Rio, Alumina.
Yeah, I think in the next 12 months, BHP, Rio, I think Fortescue will still present some opportunities, but it'll be a shorter term opportunity. BHP, Rio will be more medium term. Newcrest Mining, I think, is a much higher risk share to be going into. Yeah, but it doesn't always follow what's happening with gold. So that's the challenge with Newcrest Mining. Exactly. So you have to be very careful with Newcrest Mining. South 32 I really like, actually. It's down at the moment, right? So this could be something that, within the next 12 months, but not right now, could present some opportunities. Northern Star Resources had run hard, and it's really looking volatile. I don't like the look of it at the moment on the monthly chart, and I'd sort of steer clear of that one for now. You need to see a lot more strength. It'd have to get back above this $15 mark, but these are the best stocks to be buying when momentum is going up and when you've got a good rule on the weekly chart to pick them up. We should see some nice short and medium term trades there.
Well, there you have it. Straight from the words of Janine to you. So I think now we've got to move on, Janine, I think. I think our teleprompter's working while they're crossing their fingers.
Have we got it? Oh,
yes,
fantastic.
We've had workmen in there. You probably heard them banging around.
Oh, you could catch me by surprise giving Dale a bit of a kick when... Sometimes
she's always punching me, guys. Like, I think, seriously, you think I'm the one that's aggressive and gets angry all the time and grumpy?
Okay, let's get into some emails, shall we? And before we do, remember to hit that subscribe button now and vote for...
Give Dale a big hug.
Yeah, he needs one, okay. Thumbs up and click the like button, please. Your turn.
And share the video. Please share it on your Facebook or whatever else. But anyway, we now have a question from Will. Thanks, Will, for sending it in. He says, hi, Dale and Janine. I'd love to get your thoughts on Altium, ALU. I've attached an image of the chart showing that, in my opinion, it has broken a downtrend after testing the $32 support zone for several weeks. I've since bought the stock after it broke downtrend. However, I'm worried that tech stocks as a whole have been running up way too hard. Just look at the Nasdaq chart, my sentiments exactly, and I think it will fall with its tech. I can't even say that, Janine. Tech peers, if and when they finally go down again. Cheers, Will. I don't know, what's my mouth doing? I had a beautiful roast dinner tonight, so maybe that's the issue. But I don't agree with the trend. Can I say I don't agree with his trend line?
You cooked the dinner. Is that why you liked it?
I did. I loved it. But can I say I don't agree with his trend line?
You can.
I don't agree with your trend line, Will.
Yep, you need some practice. That's what he's saying, Will.
A lot of practice.
All right.
A little bit.
Now, looking at the chart, what do you think?
It's just sideways.
Sideways at the moment?
Yeah, it looks like a very toppy pattern, doesn't it? Right across.
Look, I mean, $38 is a strong resistance level for it.
Very much so.
Like, it's hit this level here back in August 2019, September, it hit it again. I feel like I can slow down now because we were just really, because of what happened before, we were trying to get through everything, so we're going to do this justice for you, mate. So June there you can see a high, and then we've got another high here in August. Now, it's got to get through all that. Now, it did it once as part of the run-up prior to COVID and then fell away, so obviously that's really showing strength, regardless of what COVID did to it. A chart is a chart, and we always take into account whatever the price move is. You can't just assume that it didn't happen, because it did. So, but if the stock gets through this, it's going to at least hit that $40 mark.
Yeah.
And then it's got the potential to go through that high. So if you're in the trade, you'd stay with it. But if you are not in the trade, then you'd just be a little bit cautious because it's getting close to the high. So short-term traders would probably like it for that point of view, but if you're more in it for the medium term, then you'd be waiting to see a really, really strong move up above here, because it could just turn and burn before that. Stop losses. This makes it nice and easy when you've got that sort of a sideways move to just put the stop loss underneath the move. Yeah, so I like it from the point of view of that the risk's probably not that. Let's have a look at what the risk actually is.
Well, this is part of the wax stocks in Australia. Okay, now the one that
15%. So
the one that we picked was WiseTech. We told everybody about 6 or 8 weeks ago.
Well, that was one of your favourites, wasn't it?
Well, yeah. So no, it was you picked it. I know you wrote up about it in a report as well. So you did like it as well. So it's done all right. But I think WiseTech's going to give us another opportunity as well in the not too distant future.
I agree.
I think it might come back a little bit because it ran up pretty hard. But this above that $38 mark, I don't mind that. I like it.
Yeah. So look, what you're saying is that, like, you agree with me, that's going to keep going up. But are you thinking it could go a lot further?
If I don't agree with you, you'll punch me.
No, I won't. If it goes up through that high, do you think it'll go through the all-time high?
Yeah, absolutely. I think it'll push it at least, if not go right through it. So I think there's some nice upside there potential on it.
Okay, let's have a look at the daily now to see what that reveals. So there's no gaps or anything on the downside to pull it back in the short term, but there is a gap on the daily chart on the upside. So around that $41 mark. So.
Looking good.
Looks interesting. All right.
And you will punch me. I know you did. She punched me about 30 times before we started tonight.
I'm so used to the traders forum that we run that I was just about to go to the next stock without asking you a question. So please forgive me for that,
You
Jay.
can watch the teleprompter. You don't have to
sure?
read it. Absolutely.
I don't trust it now.
Huh?
Yeah, can I read it off my paper?
No, you watch the teleprompter.
Okay, it's from Jay. Hi, Janine and Dale. Thank you very much for the great work, completing reading your second book and reading first one now. I have been in the market for a few years, buy and hold a few stocks, did not do active trading, didn't sell any. I've just started trading through my super with self-invest option. Good on you. This is the interesting part. Planning to invest 1/3 by myself and the self-invest as starting point and thinking of buying 5 to 7 shares. What is your thoughts about BKW and DDR? I knew you were going to want to, I knew you would say that.
Dickadata. No, I've bought stuff off Dickadata.
Thanks, Jay.
Dickadata is like a wholesaler for, if you go to the local IT company that you buy your computer from, or your mouse or your keyboards or your screens, they get them from Dickadata.
Right.
So Dickadata has all their relationships with your Microsofts and all that sort of stuff.
It's kind of a catchy name, isn't it?
Yeah, it is. So how we have a volume licensing for our Office 365 and our Windows 10 and everything else. Well, we bought it through Dickadata.
Okay.
I actually started an account with them.
You could sell their products, like you just say it so well.
Well, no, but it's just I bought some cool stuff off them at a good price. So
fantastic.
Now they've cancelled my account because I was.
Look, I picked Brickworks because I thought Dale would get tongue-tied on that one.
Yeah, me too.
But I didn't know.
My false teeth don't work too well, do they?
Yeah. So Brickworks, you can see that it's sort of, in a way, it's kind of similar to the Australian market. It had this big dive, remember, right here. But this was into 2011 when a lot of the mining stocks were falling. So, and then we've got this second one as part of COVID. So Australian market's got 2 big declines, one in the GFC and one now. Obviously, the distance apart's different with this stock, but momentum's been hugely bullish over the past few months with the recovery from COVID. I actually think that long term it could be quite interesting. However, right now I'd be waiting to see some sort of decent pullback. I'd want to see a pullback on the monthly chart actually to confirm that it's going to keep going up.
So basically what we're saying is things seem to be getting stretched at the moment. Is that what
things are a little stretched. I think Brickworks is a little bit stretched in terms of the pricing. I mean, if you were looking at this stock, you'd be waiting. If you held the stock right now, then you wouldn't be selling right now. That's the point with this particular one.
Okay.
So look, if you're looking at 5 to 7 shares, he's talking about his super fund. So if you're investing in a super fund, and you need to read Dale's book because that's really going to be helpful for you.
Jeez.
It's got different discussions on how many stocks to have in a portfolio. Now, typically for a super fund, you'd want to, I'd say go for the 10 to 12, but I'm not giving you personal financial advice. This is a decision you've really got to make and do your research on it. And super funds typically, you're wanting more income and growth balanced, aren't you? Like, a bit of income, bit of growth in there potentially, but you really need to decide.
I'd also stick to the top 20.
Yeah, look, top 20 but look, even the top 50 are great stocks on the market. And there could be the occasional one, maybe 1 or 2. It depends how you structure your portfolio. In our advanced course, we talk about this structuring of portfolios in much greater detail, and it really helps people to build it together. It goes down into that. But just to keep it simple, it could be like Dale says, to the top 20, the top 50.
Even get comfortable.
Yeah, even some of the stocks in the mid-cap 50 sometimes can suit a super portfolio depending on the dividend and, whether they're going up or not. So look, I think Brickworks might be okay, but I just wouldn't be, if I was looking at it, I wouldn't want to be buying it right now.
Might be some better opportunities, but let's get to the next one. The next email's from Matthew, who says, "Hi, Dale and Janine. I've been keeping a close eye on OO Media." You gave that to me on purpose, OO Media, and see good potential starting to develop as a possible stock to buy. I would love to hear thoughts on this stock in the weekly show and any pointers that you may have. Keep up the good work. P.S. Dale, you have not aged a bit compared to your profile picture in Accelerate Your Wealth, page 170. You really did give this to me. I haven't read any of these questions. You haven't read my first book then, mate. You want to see the picture of my first book? I tell you, I looked old. I looked really young then. I looked like a baby.
Excuse me.
What are you laughing at? Let's get to the stock.
Oh, gosh. I don't know if I can do this. I think you should talk about it.
Well, my current book is only 2 years old, so I should look the same as it is. I think he just did it so he'd get his question
Let's forget
answered.
this discussion and get into the stocks. I'm much more comfortable with that.
It's actually looking better. I mean, we looked at this a little while ago, didn't we? A couple of months ago.
Yeah,
and I didn't really like it, but it's actually holding up a little bit.
But it's got a gap on the weekly, so I'm really disappointed for it. The fact that it has that, because it's got to come back to fill it.
Instead of being OO Media, it's an R Media. Okay.
So look, you won't know whether it's going to, I mean, that's a positive sign that we're seeing this push off the bottom. Okay, so that's a positive sign, isn't it?
Yeah, it is.
But what are you wanting to see here in the weekly?
Look, I really do need to see it go through. It's like at that $1.40 level, because you often see stocks will start to flutter around down the bottom and go sideways for a period of time, and so you'll see that. But right now, yes, it does look better. It's had a big dip down into it. Oh, get rid of that. Me and the mouse today. It's had a big run down into that. So if we zoom that up, and you can look at the how much it fell over this period of time, you can see it's a reasonable fall, 45%. And a lot of people don't take that into consideration, how far something will fall. And that's 1, 2, 3, 4, 5, 6, 7, 8 weeks.
Yeah, that's a good point.
It's a short period of time.
And it's wiped out all of that gain.
Wiped out pretty much all of that gain that it had here. Now we've had 1, 2, 3 weeks up. Not looking super strong here, but you might see this thing just go up and down and sideways for quite a period of time, and it could be just an accumulation phase by the bigger end of town, or we could drop out of bed. But again, until it got through $1.40, I probably wouldn't be interested.
Yeah, and look at the bar today. It's down. So I think it is coming back to that, fill that gap, which would be nice, because when you see a gap like that and the stock comes back and fills it, and then it turns around and goes back up, that actually is giving you more certainty that it's more likely to rise if it pushes up strongly.
Don't give them all the trade secrets, girl. What are you doing?
Okay.
Next
all right.
No, you got to look at your camera.
Oh,
Put the paper down. Do it properly.
I've been told. All right. The question we have is from Paola. Thank you very much for sending that question in. Janine and Dale, thank you for your informative videos. I look forward to them every week. I've read both of Dale's books and find them readily helpful and easy to understand. My question for you today is about A2 Milk, great company. I bought it this year at 1961. It's been flat for a few months. Now it's falling away, apparently due to executive massive selling. What's your opinion for the medium to long term on the stock? Thanks again for all you do. Regards, Paola.
I think I looked at A2 Milk yesterday, I think.
Look, I mean, at the moment it's down.
It's down.
Doesn't mean it's going to stay down. So
she bought it at $19 something.
Yeah, speculation's everything at the moment on the market. But look, there's a lot of sell signals there. Every sell signal that we probably would teach in the course has been triggered.
She was buying when we would have been selling.
Yeah, look, straight away potentially. There's Look, the stock was going up. It was showing signs of strength through here, but then this looked really weird, this move up with this outside bar there, and then it just fell away. So look, I would say to you, whenever you're going to buy a stock, look at the chart. If she bought through here, you couldn't help that because it looked really strong, but they pump the stock up sometimes.
They do.
And this is what you've really got to be mindful of. So in the course, we teach you how to work out how far a stock's likely to rise when it does rise, where it might meet resistance and where it might come back from. And it's a really in-depth process that we go through in teaching people that. So right now it's traded below this low, and I'd say, yeah, it's down. I think you really need to look at what you paid for it, work out your stop loss and decide where you're going to get out, basically.
Yeah, so, and I think she should there. I mean, is executive selling enough to push the price this deep? I don't think it is.
No, I think that actually causes a headline, and that creates more people to get on board. So if if someone's short selling this to make a profit out of it, as soon as they would know, the big guys, they'll know that they're selling, that the
This means, to me, this falling away now, I'm going yes, because it'll mean when it finds some support, I can come in and buy that at a good price.
Eventually it'll be a really good trade.
So stick it on your watch list. So I think is it me now? Okay, it's my question. Cool. The next question we have is from Barkat. Hello, Dale and Janine. Could you please give me your thoughts about CSL and Cochlear, as you've mentioned in your book, Accelerate Your Wealth, a stock which has good EPS and good dividend yield, however, with high PE ratio, is still a good buy. CSL offers 1% dividend yield with an EPS of 6.72. However, it has a higher share price and also have high PE. Don't you think it has lost its growth momentum as it is overvalued? Much appreciate your work, Barkat.
You've talked about this stock, I think it was a couple of weeks ago.
I did.
And your comment at the time was that it's going down. At the time it was pushing down. And it's actually reversed and come back up again, but it's still down. This week it's down. The week that it pushed up really strongly, I'm assuming that everybody thought, oh, here we go again, it's going to take off again. But I think that, that's just temporary at the moment. It could go back up, but it really needs to close any week really strongly above about $3, $300.
The P of 6, that's pretty good.
Yeah, if it can get above that, it should be able to get through again. But that'll be the real challenge for it. I'd like to see it fall away further, obviously, because we'd like to get, you really want to see that downtrend unfold properly, which would mean it would have to take out the COVID low to do that. Now, I'm not saying that it's going to, but a move above this high here signals at 318 that it's going to go to a new all-time high. So let's just wait and see.
I mean, right now, if I said to you bullish or bearish, what would you say?
I'd say it's more bearish than bullish right now.
So I would agree with that. So I'm with you. I think it's probably got a little bit more downside. But let's get to the next question. What do we got?
Okay, the last one we've got here.
Is this our last question, is it?
This is our...
give me that piece of paper, girl. It's like a security blanket for you, isn't it?
Yeah, because I'm worried they're going to stop scrolling it and I'm going to get stuck halfway through.
You just do your job. Come on.
I really enjoyed the podcast, What is Black Gold? Oh, thank you very much. On the 18th of the 8th, I put this podcast up for people if you want to listen to it. I talk about what's happening in gold. I'm going to do different commodities over a series of the next few weeks. So or months, so it just depends on how the podcasts get spaced out. So they've said that they're also interested in iron ore. Can I talk about iron ore? It's traded on the futures, and I'm also interested in energy futures, but that was not one of the choices. So that's a really short and sweet question. It's actually the second last one, not the final one.
So he loves your podcast? Or?
So he likes the podcast and wants me to talk about iron ore, which is definitely one that I've got on the list. So don't worry, we'll get there.
Okay, so our podcast, if you haven't heard our podcast yet, they're called Talking Wealth, which is the name of our show that we're putting up on Flix as well. So if you go to iTunes or Stitcher or whoever they are, all the different podcasting platforms, just type in Talking Wealth Podcast, you'll come up with that. And Janine and I have been doing podcasts for probably 15, 16, 17 years. There's thousands of them there, and Janine tends to do a lot more on things like stocks or commodities and other things and fundamental stuff, and so there's some great podcasts. And you're telling me to wind up.
Can we get into the next share?
Have we got another question?
We've got one more.
Oh, you told me that was the last one.
No, I said second last. Okay, I'm going to read out this one now. It's from Jimbo. Jimbo, I love Jimbo. That's got to be an Aussie.
I'm not talking anymore.
If this is not an Aussie Ocker name, I apologise. I currently own shares in Woolworths and have a trailing stop loss at $37.50 in case it continues to fall and fall through support slightly above this level. Can you please have a look at it for me, Jimbo? So, okay, Woolies. Interesting share, but it's come back really hard this week. Which is interesting because you would think that a lot of the supermarkets, Woolworths, Coles would be doing well. I think that it could get sold off more. We've got a gap down there on the daily. The risk is it's going to come back below $37, so that's the real challenge for Woolies at the moment. And I'd be liking it a lot more if it actually does come back there, from the point of view that eventually when we get the setup and it moves back up again, we'll get a much better entry. So it's not going to be easy to stomach for people who have currently got it, with it falling back there. I would say that if Woolworths goes below this low here in June 2020, then I would really strongly suggest that it's going to continue to fall further. So I'd be really concerned about the share price. So look out for the move on the way back up after this current fall. That's
cool. So if you're not in it,
interesting.
stay out, watch it, put it on your watch list because it could be a good stock moving forward.
Jimbo.
So, but thanks, Jimbo, for all of that. I've enjoyed that one. Good questions tonight, weren't they?
Very good. Okay, thank you very much for enjoying watching the show tonight. We're glad to have you all aboard, and thanks for participating and sending in your questions. Look, we love to get different ideas, and we'll look at your requests for upcoming shows. So, particularly people, if you're on Facebook and watching, then if you put in a request, then we're likely to answer that next week, and we look forward to seeing some of those questions coming through.
Now remember to hit that subscribe button, it's there somewhere, and stick the big thumbs up as well if you like the video. Also remember to share tonight's video on your social media with your friends. So if anybody watching on Facebook, hit share please and do that so we can help the show grow and help a hell of a lot more people. And also remember to put the show on your calendar, as we'll be here right here every single week, every Tuesday, live on YouTube and Facebook, 7 to 8 p.m.
As always, we're happy to receive your 30-second video questions, so send them to info@wealthwithin.com.au and just type Wealth Within Live in the subject line. That's also for all of you. If you're wanting to send questions, better off to send them in to that email address rather than punch them onto the chat. You must do this before 3 p.m. on Tuesdays to get into that night's show.
Well, that does bring us to the end of the show, and again, we really hope everyone has enjoyed it as much as we have. My mouth hasn't been working